as you're well aware, people obsessed over the trading results in the first quarter. You attributed it to poor performance in the U.S. rates business.
That's right.
Is that business back on track? Is there reason for shareholders to be concerned about the results that trading is going to deliver in the second quarter with vol where it is?
What did Lloyd say about Goldman? Yes, we are human. Yeah, I mean, obviously it was a disappointing quarter for our rates business in the U.S. We have a new head of our corporate investment bank, and Tim Throsby, right, who comes from the market side of the business. I think has a great history in the markets business. But no, I'm not concerned. I think I think what happened is as much. We beat consensus in basically every part of our investment bank in the four quarters of last year. This is the first time really since I've been CEO that we missed consensus on an important desk, and the market didn't like it. But I don't think it reflects some structural challenge that the bank has got.
Is it going to happen again?
I'm sure at some point some desk will miss somewhere for sure.
But what people want to be reassured of is that they're not going to get an unpleasant surprise 60 days from now.
But let's put it in this context. The unpleasant surprise was we missed, a 20% jump in earnings. There's no loss there. We didn't,
right,
we didn't destroy shareholder value. We didn't do as well as we.
But your shareholders want you to be competitive.
Yeah,
and you want you to be
we
competitive.
are competitive. And we are competitive. In the credit business, we had a great quarter, and in the M&A business, we had a great quarter. In debt capital markets, we had the highest market share in debt capital markets in the history of Barclays.
Would you liken Barclays' situation today and where you want to be 5 years from now to where, say, Morgan Stanley was 5 years ago?
I think we have, and I have tremendous respect for Morgan Stanley. I think they've got a great culture, and
because they doubled the size of their equities business, right? They grew after a time when they were facing questions about the viability of their fixed income franchise. Nobody's asking those questions anymore.
Yeah, which is great for them. This model of having a wealth management business, and James Gorman, he talks about his beta business and his alpha business as being the investment bank. There is a similarity in the strategy. Again, we have the corporate and the investment bank here on a global stage, and then we have the retail bank and the consumer businesses of Barclays. I think hopefully the commonality between Morgan Stanley and Barclays is I think they've stayed the course, and they'll reap the benefits of staying the course. I think we're going to stay the course now, and we'll reap the benefits down the road of staying the course.